years. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here on this Wednesday, the 25th of May. And we're looking at the general market here. It's just kind of mixed. The Dow's up 5 at 31,933. Holding okay, but nothing great. Really, this is the bar that should be a very strong green bar, going from 31,929 right now to the 32,120. So above the 14-period moving average. And we're looking at the S&P. There we go, SPX.X, at unchanged at 39.41, really struggling. This is a market that's having a tough time. It hit the Chapman Wave inside track repellent zone. It's also the 9-period exponential moving average resistance. So that's difficult. You need to see 39.42 right now. I want to see 39.68 by later today. Day's young. We've still got the Fed speak to come. Market's going to be hunkering down until then, I think. We got the QQQ down 44 cents at 286.77. Needs to get to the 290, 293 area by Thursday. We're looking at the IWM. The IWM is trading up 84 cents at 176.41. Just okay. Gold's had a very sharp pullback. Gold has pulled back at $16 at 18.48. It's right on the 9-period, the pink 9-period moving average. And until that can cross positive, you've got that 200-period moving average of 1863. I've been talking about this for a while. It was support, then it became very strong resistance. It's going to remain that resistance until gold can really start to trade sharply into the, I would put 1883 area or higher. We're looking at silver. Silver is also pulling back a little bit, down 16 cents at 21.90. It's gone to a peak B. Well, it's a leg B. We'll see if it's a peak B. If there's no new high, it's really not a very strong chart at this particular point. Now, this is going to be very interesting because, look, the dollar is having a nice update, up 48 cents at 102.23. Basically, what we're looking at, that 102.80 is the 9-period moving average, would cross negative, which means that the dollar has gone into a sell signal. As yet, I'm not calling it a sell mode, although technically I have to wait for the end of the day. It looks like it might be. But if this can be a counter-trend bounce towards the shorter-term tide, which is coming down, then we'll see. Because if in the next 3 to 5 sessions going into early next week after the holiday, if the dollar is trading at 103.25 or higher, that's just saying, you know what, just a little bit of a consolidation. That's maybe the reason why gold is not pushing very sharply high. A question about XLE. Yes, the XLE is doing really nicely. A, B, I have to change that. So we've got a buy mode with XLE trading at 85.66, up $1.45. And now I'm going to go A, B, C, D, and here's leg E in the daily chart. Now, this is very unusual. I don't believe this is a leg G in the weekly chart. It's really a G/C, and everything's pointing to chances that it's a much stronger than that. It's at a C in the weekly chart, and a leg E is continued up in the monthly chart. So this is just telling us that the whole idea of energy, all forms of energy, whether it's the crude oil sector, even heating oil. Just look at this, heating oil. Look, holding up near the highs at 3.81. If you're looking at natural gas is trading at a new recovery high at 9.26. If you're looking at, I did that. I just wanted to show the utilities, only because it is an energy form. S&P Select Utilities Fund. It's a little different. It's a different form because it is the utilities, as many of them are, quite a number of private, but you also have your public ones. So this is holding very nicely. So let me show you crude oil, CL. There we go. Oops, crude oil. Crude oil is trading. There we go. Up 71 cents at 110.49. Now I have drawn in a little rectangle here that says crude oil in the context of the pattern where you spiraled up to that high that was made back on the 7th of March at 128.60. Has that changed because it's a continuous contract? Let me just double check. 120, now it's 125.83. Remember, it gets smoothed out. Everything's the same except the price because it's a continuous contract. 125. I can't remember. I'm just going to make it 38 for now. That was the high. And now if you look at that high that was made back in March, you've got a rectangle formation within a cup formation, and that's suggesting that you're making higher highs and higher lows. But look, you went to a sharp leg E. I'm really calling that a peak E because there's no question that that was a significant turn in time, and I'm putting a down arrow. Within that, you've got a leg A, 1 bar rest, a higher leg B than a peak B, 1 bar rest, a higher leg C, and so far this week you've had a week of rest. So what happens next is going to be important because if crude oil, instead of having this alternating every other month, a new leg up and then a peak, if in fact this is the move that really spirals to the 113.80 to 114.56 area, that's going to be a very strong suggestion that the 113.30 high of the week of the 25th of March has been taken out, and that now you are going to approach the idea of that 123, the high of the March the 7th. So that's what we're looking at, because there are always two fighting patterns. No matter where you are, there's always two fighting patterns. In this particular case, you've got the cup with the rectangle, the large rectangle, and then you've got a potential for the dreaded H. And that H will form if crude oil, I don't know what it'll be, but if crude oil, for whatever reason, closes underneath the 14-period exponential moving average weekly of 101 at any point in the next 3 weeks without having broken 115, it says, finally, you've got a respite in crude oil. But at this particular point, you can see through the whole energy sector. Let's go back to the XLE. This is the S&P Select Energy Spider Fund. It's at 85.68, up $1.43 at a new recovery high. However, I do say recovery high, and now let me show you something even more important to do with chart patterns. Look, it was at 99.73 June of 2014, plummeted to 22.88 March of 2020. So this is a comeback from that Chapman Web Inside Track repellent zone where it broke out above it, and now what you've got is the shorter term cup formation. So far, it's way above the high of May of 2018 at 77.63. So as it stands right now, energy is in play, and that's the reason why for subscribers to Opening Call, we went back into an energy play this morning. I'm not sure whether it's going to be working, but it's in the right sector. And then one that we wanted to get, an energy company, it was a screamer, and I wanted to pull back and put back a fraction pre-market, and now it is up almost 5% on the day. So we missed it. It was a perfect choice, not perfect. I'll be back in a moment.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
I was back. Dow's up 64, S&P's up 11. I had a couple of notes saying thank you so much for that intra session Chapman wave notations on the 1 minute and 10 minute charts. Pleasure. It was my pleasure. I love doing that. I could do that all day. I do it all day, in fact. So this one had a peak C and then a pullback, and then it had a gray peak A, peak B, and a peak C underneath the previous high. And then when I typed in during the break, those people who were watching my notations live saw me type in, should have a Chapman wave overlapping spike to leg D and then retest the former resistance at peak C. So here we are. We've just done that. As I was talking, we just did that. Unfortunately, not with me trading, just looking and typing. And now we should maybe get a bit of a pullback to the 39. This is the S&P 500 June contract. Maybe you don't have to do that right now, but you should have a test of the 39.55, 56 area, and then we'll see whether or not they're new highs. So a couple of questions came in. One was, how come you were sounding not necessarily bullish, but very positive on your positions in the Dow yesterday? Well, I'm not sure that I was very, very positive on the positions because I had to wait until that breakout occurred. But the reason was that if you look at the DOG, and this has worked for us many times for subscribers to my opening call, one of the best ones ever was the March 6th low in 2009, where the day before we were in leg D. And I said, everything points here to this being a major turnaround from the peak D. Chapman wave, the fourth highest peak, that's what we think can change. Therefore, we're going to go long tomorrow morning via options, and we will then keep the options, which made between 200 and 600% gains. But what we did is April the 4th, I believe, we bought the diamonds. We still have that position from 2020. And that was because, I'm mixing up two particular periods. I'm talking about 2020. We had almost the same thing with the peak D and the DOG. But the one in March the 6th, because you remember the 9th That was Friday. Monday, the S&P made its low. That was 666. So basically what we were looking at is that same inversion. And if you look at the SH, also not as good as the Dow, but at 16.54, the one-to-one short, the S&P has had 3 sessions so far where it hasn't gone close to the 1654 high. And that's just suggests, and you look in the weekly charts, only a leg C. So I'm suggesting that on a shorter term basis, the bias should be at least for a little while to the upside. A little while meaning maybe through the long weekend. We sometimes get that, not always, but sometimes. And then maybe Tuesday we have to look at something very different. So yes, that was one thing. The other thing was based on my work with this W formation, I'd said the technicals here on the 20th at 30,635 in the Dow, rounding up to a peak A minus because it took it out and went to a lower low of, that was the 12th. And then 30,635 was the low on the 20th. The technicals were way superior. The on-balance volume made a nice turnaround. The stochastic was higher, not good at all, but higher. And therefore, it gave us a chance to at least say, hey, we're always trading the Dow one way or the other. Let's add to the core long positions we've still got from 2020, and let's get to some new positions. And we've been doing that all the way. In fact, almost every decline we've been buying, we've actually mostly made money in the diamonds, even though the real thing should have been sit tight, go short, and let the market tell you. Now I think we've got a change of trend where I think the shorting side of it is not going to be quite so lucrative. So let's see, Basil, plug in ZM. Yep, I'll do that, ZM. ZM is Zoom video, once upon a time, 588.84, back in October 2020. Had a little bit of a pullback. I didn't type this in, but I believe it was about 80, maybe 79, I think, 79 something or other, 79.03. All right, 79.03. I think that was the 12th. I'm just going to put 79.03. That was the low. It's made a peak A, pulls back. And remember, this A is still current. Even though it pulled back, it didn't take out the low. So this becomes another A, and that becomes an overlapping B. And now you've got a B above the main trend line resistance, Chapman wave falling axe formation with the inside track resistance, at least for now, up $4 at 98.37. Yes, I think that was funny. I must have typed that as I was going to type something else. So that made a trough E, I believe. Well, 2 weeks ago, it made the low. So that is D. That's D with a plus sign. Always put plus signs above or below D's and E's to say be warned, be wary. This is where you can get a turnaround. And now you're getting this turnaround. I love this turnaround because it's so quiet with the doji candle low. Look how many times we've had a couple of doji candle lows. Out of all of these, we've only had a few doji candle lows that on a weekly basis that try to turn up. Now this time it's trying to turn up and there's nothing yet, but I can tell you that if Zoom, ZM, is a symbol, at any point touch, it doesn't have to trade there. It just has to touch 105, the 50-period moving average, and I'm pretty sure that stochastic will be moving to the 63% area. I might even start to get something that says, not the weekly, not the monthly, horrible candles and patterns, but the daily might be in a buy signal, and that you can only go from the buy signal to the buy mode, and then if that works, you can say, oh, now the weekly's improved. And that's how we got the dollar when we got it back in April of 2018. It went slowly from one level, buy signal, then buy mode in the daily. It did twice, and then all of a sudden the weekly started to improve enough for me to say, hey, I think I've got a buy signal in the weekly. And then it got to a buy mode in the weekly, and finally I got a buy mode in the monthly. So you can only go step by step. Those people will look at the chart and then say, oh, it's trading at 98. My target is a double 180. No, I'm going to 250, and they give you some reason. Everybody can do that. It's the easiest thing in the world to project. But you can only do it if you go step by step. If you can't go A, B, C, D, it doesn't work in the market going A, B, G, F. It just doesn't work. So that's what I'm saying. So let's see. I don't understand that you draw the arrow on the left. Oh, do that. That's Z. And the arrow on the left. This is not traditional. Oh, that's not for me. Okay. UDAL. Yes, all right. Duffy's got the UDAL. Good. That's another way to do it. We just added to our positions. So we've got a very long-term position from 2020, and then we've had a lot of different positions, and now we've got a couple of short-term positions on the long side. And I'm treating them as I have a foot hovering over the brake. I'm raising stops. I'm just treating this with respect. I don't expect that this is the way you get major turns. We didn't get the volatility index doing what I usually like to see, screaming. Look, this VIX index, this is not the way you make major lows. You can make pretty decent lows. And now the VIX index is at 29, 24 days young. So if after the Fed speech and everything, you're seeing this down to the 28, 30 or lower level, the VIX index, this market is free to move higher. So this is a very important day. We'll see what happens after 2:30.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back. So, we're all about education here. So let me just show you a couple of things, because look, I've got a naked chart right here. I need to make these a little thicker there. Maybe that's too thick. I don't like them too thick. Anyway, just let's see what happens like that there, just for now. So, okay, here we go. So this is just a bar chart. Doesn't matter. Let me show you something. First of all, remember we were looking at this and I said, in the Chapman methodology, an overlapping wave, if it breaks out by C or D, before D, should come back and retest the bar that was the resistance level. And I said, that's the bar right there at 946. The bar high was 39.5625. Well, we did exactly that. We pulled back. We went to the 39.55 level. Then there was a Chapman wave instant restart. That means after a peak D within 2 bars, maybe 3 bars, but I prefer 2 bars. This is 3 bars right now. It went to a higher high. So that means it gets an alternate count, E/A, G, F/B. But I decided I was just going to put in A and B because the technicals, the MACD was strong, stochastic, everything was strong. There could be a turnaround. So in the traditional way that I do this, I always say, keep the notation going. And in the meantime, you can think alternate count. But once the technicals are still strong, think of it as probably a brand new buy signal that's gone to a buy mode, that's going to go to another C and D. So look what's happened. So all of a sudden you've got everything. Look, the MACD stochastic, the 9 over the 14 period, the stochastic's at 91%. Everything says, yeah, it's great. Now what I want you to do is say, you know what? I've practiced this for decades as a naked chart. So look at this. This is a 2-minute chart, right? Doesn't matter. I don't need everything else. Look, I'll move it over to here, and I'll say, here's your low bar. We don't know it's going to be an up arrow until a little later on, but I've done it for now because obviously we're doing it live, so it's A. Underneath it is a gray A because it's underneath that previous peak A. This is a B underneath, a C underneath, and then you get what? A leg D. So it looks weird. Oh my God, how did you go from an A to a D? Because underneath it, you didn't take out the low bar. You went peak A, peak B, peak C, and then above. And the moment you go above that previous single leg A up there, in this case, the high of 30, 39, 29, 75, it starts that count that goes to a D. So then you think, all right, D is usually where other things can happen. So we put in a down arrow and just wait and see. And what happens, it makes the V-shaped pattern, doesn't take out the left side high. Oh, I didn't mean to have any of these in here. Get rid of that. I didn't even see it. Remove. And it even has the, whatever that's called, the parabolic SAR. Funny, I have it on there because so many people have spoken about it. Hardly ever use it. I use other techniques. So now what I'm going to do is say, here's a brand new buy signal. And it goes what? It goes peak A. Whoops, peak A, peak B. And then underneath it, it goes a gray A and a gray B. Why is it gray? Because it's underneath the previous high and it hasn't taken out the low. B. And what do we get? We get C, D. This is a 2-minute chart. And E. It didn't matter what it is. I could do it exactly the same thing if you're trading the QQQ, the TQQ 3 times long. I wanted to buy it this morning, decided today that we wouldn't, and today's probably the day that it's going to do a fantastic thing. So yes, TQQ. Look, the last, look, A, B, C, D. Well, you always look for peak D, pulls back. A, B, under it goes A, B, C, D, E, F. It's a leg F, or it could even be an instant restart. So this is nothing. What do I have here? I have no MACD, no stochastic, no nothing. And that's how I practice these things. I liked it. I practice it like I practice my tennis strokes, so, or my clarinet. It's just no difference. That's all you're doing is you're taking what is given to you and trying to use all your knowledge to assess. And what I haven't done is I didn't draw. What I normally would do is I didn't draw the arch formations, etc. So look at this spectacular move. The S&P is now up 32 points. The E-mini is up 32 points. And that's what I was saying to subscribers this morning, that we want to participate. I didn't want to get too carried away just because of the Fed announcement and all that, just for, more money management than anything else. We've got our positions. I wanted to add to them. We can always add tomorrow. If we get a go-ahead that the Fed is, whatever they say, the market just says, shrugs it off and says, no problem, we knew that. We're on our way. All right, now a bunch of questions have come in. Could I look at, where was it? I saw it here. Nope, it's over there. Yes, a couple of things. So NVIDIA is coming out with earnings today. I think it's today, right? NVIDIA. A nice candle on the day, but a horrible. This is a stock that's gone. Once was pre-split. I had this in 202.76 October of 2018. Of course, that was the price that was down there, 40-something, whatever the 5-for-1, I don't know what it was, split. And now it's gone to an all-time high, a real all-time high, with a doji candle and an Eiffel Tower pattern, that A, uppercase A. And that high, I believe, the high was 346.47 with a 319 round number low on the 22nd of November, and it came tumbling down. And the most recent low was right here at 158, I think, or 57, 55, 155.67 on the 12th. So this is not a great pattern, but it was a 77, I don't know. But look, this is the Chapman Wave dreaded H pattern. This was an unsuccessful one because it didn't hold the left side low and it broke down. This one here went to a peak B. It's still at a peak B, but within it, it's having a chance to maybe turn around like that. So if there's anything that even resembles good news in NVIDIA, that is absolutely needed. Why? Because the SMHs, a question came in about the SMH right there. SMH, it's the same pattern. It's trying to establish a better right side than the left side. If I do the vertical test, look, here it is, vertical test 1. And let's go to that one. Look, rising, everything was rising. So this is saying that there's a chance, and we really need this to get a decent rally, Dow's of 200 points. To get a really good rally, what you need is to have the semiconductors about the second week of June, not at 210 or lower, but 248, 252, and that'll say, whew, maybe we're getting a handle on the shortage of the chips. Maybe, in fact, I'm absolutely sure that later in the year or early next year, we're going to have the biggest glut of chips that we've ever seen. Can you imagine when all these fabs get their stuff together? Can I post Microsoft? Yes, Microsoft. This is a very important stock as well. Microsoft. It's been in certainly a down mode. It's only stable today at 93 cents at 260. That's what I'm saying, that I think that the really big caps that made their all-time highs late, like a Microsoft, I think they're still under pressure. And that's the reason why I still think there's another shoe that's going to drop. Where it drops to and how it drops is going to be really important to tell. But at this particular stage, we've got a peak A, and it hasn't even made a leg beat to the upside after plummeting from 349 down to the 246 area. And here it is at 260. Nice move on a percentage basis from the low. But this is not the way you want to see it. You want to see Microsoft back leading. I don't think so. I think you're going to be getting new leads. I'll be back in a moment. Basil Chapman, Basil 212.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector had to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Hello, so we're back, and the question, remember I'd said that this should be considered an overlapping wave in the Chapman wave methodology, so we have alternate count next to it. So that becomes F/A, then this is E/A, there it is, E/A, and then an F/B, and it goes all the way to a G/C. You don't have to do that because all of a sudden it goes to D. See, I put the down arrow because this is a 1 minute chart, and now we're getting a digestive phase. And I could have done that. I would have done that with a blank chart, but I don't want to do it right now. Question came in here, could I do the zoom? Could I do the zoom on a 1 minute chart? So I did that. There. I did that, and here it is. Zoom. And the question was, this particular peak C that was made in Zoom at 946, 98.44, pulls back, holds what? The 200 period moving average. Did I need it over here? No, but I needed it here. Held beautifully a second time. Went to a gray A because it's under the previous high, but above the left side low. Gray A, gray B, gray C, and then there's a combined overlapping wave, and it goes to D. The question was, are the technicals here stronger than over here? So that was the 942 to the peak D, leg D at 10:15 this morning in Zoom at 98.69. Well, you can see the MACD is still rising. Stochastic was flat at about 93%. So the answer was yes. Now, this is something that it takes years to understand. There are people that use just the MACD or just the stochastic for their technical tools. I've said, no, don't do that. You need the combination. You need to have a whole bunch of things going on. It took me years and a lot of money to figure out that the price rising matches the MACD green line very often. But when it starts to diverge and you get both the MACD and the stochastic fading, you'd be getting out. But there's a beautiful indicator that tells you to stay in. Look at that green line. It's kept you in, kept you in, kept you in. I put this down arrow already over there during the break. I put the down arrow. Then all of a sudden it dropped. And now Zoom at 98.61 on the 1 minute chart. That's all I'm talking about. Is in a sell signal, probably about to go to a sell mode if it takes out the low here of 98.06. But if it suddenly starts to push to 99.12, that says, you know what? Save the day. So they're trying to make a double top. All right, enough of that. Let's go back to our story here. Questions came in while I was talking. So BX is a question. BX, stock that I've loved for years. Only rarely have we actually owned it. This is a Blackstone Group, financial sector, mergers, acquisitions. Look what it's done. Now, we've just seen too many of these. You make a low, or the price makes a low, and then it goes peak A, pulls back a little bit. A nice strong leg A, then it pulls back, and then it goes to B, but just a nominal B. Then it pulls back, and then it goes to a nominal C, and then it pulls back, and then it goes to a D. This is not very bullish action because you've got to a peak D way below the previous peak D in this case, which is up in the 134 area back in April, and we've already plummeted down to the 94s. So a great percentage gain from 94 to 109, but it's only a starting position. It's only a start of some kind of reversal to the upside. So the question, Jason, is this. I'm going to suggest it is in leg D. Split two positions, and even though I'm talking about it as a starter position, you still have to split two. You can get one right here at 109.30, but the other has to be at about 106.50, and I'd have a 105 stop on the whole bulk, everything. If you get just one, that's fine. But this is the move that says you can go sideways here for a little while, build some energy to move upside. You don't have to move upside. You can even fill the gap. This is a very tricky thing. But on those rare occasions where it works out, if you can get in nice and early, you've got You've got yourself an amazing cushion. And that cushion says that if you get in here and all of a sudden, even if you have one position, let alone the two, but just one position, if it goes to 112.80 to 113.25-ish, there's a real good chance that the 200-period moving average will become a magnet. All right? So that's BX. The answer is you just start a little position, split the position, take a little bit here, and have another one in, I'd say, 106, in the 106 area. All right? And then I would have the 105 round number stop. All right, that's that. Next question is TRMD. Yes, Garo uses the SAR. I use so many other things that I have it there, and all it does is it kind of gives me confirmation of something, but I've seen it missed too many times to say, that's something I really want to use all the time. I just have it as an additive, and tell the truth, there are certain things that I see and I don't act on because it doesn't trigger my memory or anything like that. I see my eyes are looking at it, but I'm not seeing it. All right, TRMD. Oh, this is Storm PLC. This is the one that was in the shipping area. I had this as a screamer a long time ago show up. I didn't have it. I didn't choose to go there. But this is spectacular action. I know, Peaky, you've had this for a long time, and I can't remember if you were adding or not, but it did make that peak D and then pull back some to the 14-period moving average. This is acting so well. Normally I'd say in a situation like this that you should take a little bit off. I would say take a little bit off. In this particular instance, I think the shippers are still the way to go. DSX. Yep, that's at a very A, B. Look, from the low bar at the 200-period moving average, peak A, peak B, peak C. Yeah, it's still in play. The shippers are still in play. So I'm not going to say that. What I am going to say is on a small position for TRMD, I need to write that down. I forgot all about it. TRMD. What I would say is if it pulls back, fills the gap, watch it closely at 1289 to 1230. That's where you might be wanting to add to it. On a purely money management situation, this is where I would say to you normally, take a little bit off and you can always put it back in that 1290 area, 1280. I think I have to say that here as well. I do. I have to say that it spiraled up to a recovery high. It's fabulous action. Leg E, leg D, because of some of the other shippers. What is NAT doing? This is Nordic American Tanker Shipping. Oh, this is the one that isn't working at all. Oh, this doesn't look good at all. Sorry about that. So, yeah, that's what I'm going to say. I'm going to stick with my usual recommendation, saying take a tad off, and that very tad that you take off, you could put back 2 points lower. I mean, that's great because you're getting it at a discount if it works out, and then see where it goes. But it is a leg E to the upside, so I'm saying just take a little. Okay, we've got one segment to go. Duffy says, Basil, if you programmed the routine to do that automatically, Duffy, I have a number of times over the years. It's the ones where where it really is a very visual thing, and that will screw up the computer absolutely because it will dominate. I'll be back in a moment. Dials up 147.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, your VLO is Valera Energy. Spectacular move from the 60s back in the beginning of just the end of the year last year, beginning of this year. And here it is up at the 127 level. It went to a peak C. It should make one more high to a peak D. Now, I must say that on a shorter term basis, some of these in the oil sector, some of them are suggesting that we're getting a little toppy if at any stage crude oil does suddenly pull, if crude oil suddenly pulls back. But I don't know what's going to take it down sharply. All that would happen is it has one news event that gets it to pull back from 110, maybe to 108, maybe even 107. And then it just goes right back into the rectangle and it continues. Remember, rectangle formation can last a lot longer than your patience, just trading between the high and the low of the horizontal bars. To get crude oil down to the 105 area or 104, I just don't know what there is because there's a shortage. And there are momentary, look, aren't we using stockpiles? What is it, a billion, I don't know what it is, huge amount a day. They can't keep doing that. We've got to be replenishing. We're not replenishing. Wow, I mean, we're doing some things in the oil sector that I've considered for 2 years now to be really important either to do or not to do. And if you don't do it and you don't do it well, wasn't that the opportunity to get environmentally friendly, all the laws you wanted for the energy sector to say, we'll do it. We just want to pump oil. Tell us what to do and we'll do it. Whether they do it or not, that's something else, but that's not the issue. So this is something that I'm saying. I think crude oil is here with a high-level consolidation. That's going to be continuing for a while. So just before we wrap up here, I'm going to say, stay tuned. You've got Larry Pesavento coming on. You've got great programming all day. I'm just going to do this. The VIX index, I spoke about it earlier on, with the volatility index trading at 29.54. At any point after 2:30, starts to trade instead of up at 29, 18, 30, and 50, actually goes down below 28, 40. That's going to be